What is going on, investors? Welcome to my channel. This is the Frugal Investor. In this video, I am going to give you guys one of the fastest and the best dividend growth stocks out there in one of the most in-demand sectors. With that said, let's get right into it. The stock that we are going to talk about today is Broadcom. Broadcom is a semiconductor company. This company is based out in Singapore. Its biggest customers are Apple, Cisco, Hewlett Packard, Nintendo, and Dell. Most of its business is generated from Asia Pacific, with only third of its business coming from the United States. That is a great thing because Asia Pacific has one of the youngest population with one of the fastest growing countries. Semiconductors Semiconductors and chip manufacturers are in great demand in the Asia Pacific region and in the United States as well, which has a huge room to grow as well. So this company has a lot of room to grow in the future, its top line and its bottom line. It is a great play if you want to be in touch with Asia Pacific in your portfolio and want to have that diversification across different continents. If we look at the stock has shown some amazing performance. Over the past 1 year, the stock is up by almost 46%. Currently, it is trading under the symbol of AVGO, Broadcom Incorporation. Over the past 5 years, the stock is up by almost 172%. The stock has shown some amazing performance. It is a very high growing stock. Not only that, Broadcom is also paying out a dividend. The current dividend yield is 2.98% and the annual payout is $14.40. They pay out their dividend quarterly and the 5 year growth rate of the dividend is 50%, guys. 50%. Okay, this is a huge amount of growth in the dividend payout for this company. That just shows the amount of revenue that this company is generating and the amount of growth that this company is seeing in its revenue and its top line and bottom line. Over the past 10 years, the company has never missed out on a dividend. Not only that, they have been constantly increasing their dividend. As we saw, it has gone up by almost 50%, guys. That is amazing. So this has a great dividend paying history. It has a huge amount of dividend, $14.40 per stock, which is about 2.98%. It has been paying their dividend for almost 11 years now. It is one of the safest dividend paying growth stocks out there. If we look at their numbers, the company has constantly increased its top line year over year over the past 10 years from 2.3 billion to 23 billion dollars, 2.3 billion in 2011 to 2.23 billion in 2020. Okay, it has gone up significantly in the top line. If we look at their bottom line, the bottom line has also seen a substantial increase year over year. Now in 2016 they reported a loss because Avgo conjoined with Broadcom. So Broadcom acquired Avgo. Broadcom is a Singaporean company, while Avgo was an American company, and they acquired it. So that was the loss that they were facing. So 1.7 billion of their profits went into that acquiring, and that's why we see a loss over here. And but they are a profitable business, and their bottom line has been growing constantly. If we look at their 10Q for the year 2021, the products, which is their semiconductors that they're selling, is one of the biggest revenue generators, with subscription and services being the second revenue generator. The products, the highest revenue generator is Asia Pacific region for their semiconductor play, and in subscription and services, United States and Americas is the highest revenue generator for them. That is also grown over the past year. If we look at the amount of cash that the company has on hand, currently they have about $9.5 billion cash on hand and the debt is $40 billion. Now, I would want to see the debt a little bit down, but seeing the amount of growth and the amount of potential that this business has, they are a growing company and they're paying out a great dividend. So it's not a terrible situation, but in the long term, I would see the cash balance on hand and the debt to be at least at an equal ratio, if not at 1 or 2% higher, but not to at 40 billion and 9.5 billion. Currently, the price over earning ratio for Broadcom is 26.15, and the future price over earnings ratio for Broadcom forecast is 13.18. Now, that is a great position to be in for a business like this. It is a high growing business that pays out a great dividend, that has a huge room to grow in developing markets and developed markets, that produces semiconductor, which is in great demand in every country in the world, in all continents, with the coming rise of technology. This is a great business to buy right now, in my opinion. Currently, I hold about 12 stocks of Broadcom, and my average share price is $432.93. Currently, the stock is trading at $481.26. So, it is a great business to buy right now with pays out a great dividend. It has a huge room to grow in the future in developing markets and developed markets, very well diversified, very well managed, good amount of cash on hand, not a high amount of debt, but there is some debt, trading at a normal P by E ratio compared to the type of business this is, compared to the high amount of growth that it has seen and it's going to see in the future and the demand that is seeing. It's comparing at a fair P by E ratio and a fair forward P by E ratio. That's what makes me so bullish on Broadcom, and I will be adding more even at this price point. That was my analysis of Broadcom, guys. With that said, this is the Frugal Investor signing out.